Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 8th, 2018. This video I wanted to go over, do an update on gold, silver, the US dollar, and euro, and then, time permitting, I want to go through a watch list of individual gold stocks I have now. It's a long watch list, 43 stocks in there. It's a sector on this charting platform that has 43 different components. So you'll have most of what's in GDX and then some. And what I'll do, I did the math. If I can just quickly hit on each of those charts, keep it well under 30 seconds on each chart, that should keep us under 20 minutes on this video. So it won't go too long. Quick refresher on gold. I put a front page post out there recently. What stands out to me, I know gold is unloved. The gold stocks are unloved. It seems they can't catch a bid to save their lives. That's one reason I like it, but not the only reason. You don't buy something just because it refuses to go up or it's in a downtrend. More importantly, the fact that it's unloved, and it seems like, well, imagine a lot of traders and investors are giving up on gold at this point, and that's when you want to own gold. You want to be a seller when everybody's bullish and everybody's long, and you want to be a buyer when people have given up and nobody wants anything to do with it. But more importantly, when the technicals confirm as well. Look for divergent highs, lows, look for support. So this 113-ish or 114-ish area is a pretty important level on gold. It has contained all the pullbacks since gold bottomed back in late 2016. So we had a rally, and so far all the pullbacks have been contained there. We haven't visited that level now since mid 2017, so it's been over a year. Keep that in mind. But again, support is support. And in trading, when going long, there's couple ways I like to position long, either on a pullback to support during an uptrend, if I think that support will hold, or on a breakout above a technical pattern, resistance level, chart pattern, downtrend line, like in this case. So you have both here. You can go long at support, which is objective, and then there's a downtrend line. You can see there on GLD. I'm using the ETF here. So there's the outlook for gold. Let's look at a weekly chart real quick. We have this big symmetrical triangle. I'm talking about this downtrend line off the bull market highs, a previous bull market back in 2011, and an uptrend line here. Now, given this uptrend line has been violated, but this is the ETF. I do have a chart of GLD. I'm sorry, of GOLD, the gold futures on another charting service, and there is an alternative trend line that comes in, and gold is flirting with that trend line now in a weekly time frame. Um, and again, the trend line, I also want to say this, and you've probably heard me say it a lot. Trend lines, at least in my opinion, the more tags, reactions, I should say, off that trend line, the more valid. So we have one, two. We didn't really have a reaction here. See how we moved on through? There weren't any green candles or a bounce there. So as far as validity, I have a trend line drawn here. If we get a reaction from around this area and start to reverse, there may be a valid trend line. We may have to modify it a little bit. But again, sometimes these ETFs don't do a perfect job of tracking the underlying. So you give it a little margin of error. And more importantly now would be this horizontal support level right here. You can see these two lines, this lower one around 114.90 or so, and you see a lot of reactions here in the last few years. Reactions from above once we broke above that level, and reactions from below. A lot of reactions back here. So this seems to be a technically significant level for gold. So there it is. That's the case. Oh yeah, other than that, here on the weekly chart, well, this is the first time since late 2016 that we were oversold on the weekly time frame on gold. That last reading, you would have done very well stepping in and buying. So if you're under the premise that the lows in late 2015 marked a bottom, the end of the bear market in gold off the 2011 highs, if that is your impression, you want to be stepping in here with both fists right now. Metaphorically speaking, you want to wait, scale in, don't go, loading the boat, don't put your whole portfolio in gold. That's not what I mean. I'm saying if you allocate your decision is to go 20% weighting in gold and gold stocks, once evidence is there, maybe take a half position now or so. But again, and I'm talking also for a long-term investor, you want to buy when no one else wants to. And if this is a bull market in gold and this is a pullback to the oversold level, that is when you want to buy, because in uptrends, oversold rarely becomes more oversold. Those readings are usually one and done, they're fleeting, and you reverse. But in a bear market, and this was bear market action here, even in this bear market, there was one tag and then it reversed, another tag, it reversed. So again, in bear markets, oversold is more common. In bull markets, overbought is more common, where you become overbought, stay overbought for an extended period of time, or really cross much above that overbought level. I'm talking about the 70 level, that red line, whereas 30 is oversold. So there it is, overbought at support in what may prove to be a longer term bull market. And if you want to play the game of measuring out, sure, you can say, well, that's a bull market because gold rallied 30% there. But when you look at the bigger picture of things, monthly chart, it's hard to say that this is a bull market. This was certainly a secular bull market, and maybe you can say this was a cyclical bull market or is within a larger secular bull market. Again, semantics really, if you will. This was a bear market undoubtedly because we had a drop there about 45%. Okay, I'm getting off topic, but I just wanted to drive home that point. Gold is at support on the daily chart, the weekly chart, and oversold on the weekly, and we have bullish divergence here on the RSI. So that's the case for gold, bullish case. GDX, I've always said this, GDX or the gold mining stocks, in my opinion, are simply a leveraged play on gold. What I mean by that? Well, they're not leveraged, but they're stocks or companies whose biggest component to their bottom line is the price of gold. When the price goes up, it's just a complete boom to their bottom line. They're pulling gold out of the ground and selling it. Their cost to pull it out at $1,000 an ounce isn't any more than it is at 500 or 2,000 an ounce. They're still running the machines, paying the salaries to do it. So when gold goes up 30, 40, 50% in price, that's a huge a boost to their bottom line, likewise when it drops, vice versa. So therefore, when gold rallies 10%, 20%, you're going to have most mining companies rally 20 or 40%, sometimes more. That's the bottom line, and it cuts both ways. Now, GDX, as I mentioned, at support, a lot of tags. Again, even more than gold, actually, because GDX bottomed back in late 2016, and every single pullback, without exception, has been capped down around this level. We're a little bit below it now, but I did highlight that as a potential and actually preferred scenario recently to see us undercut those lows, to wash out the last of the weak-handed longs, to suck in a few more shorts, because that would provide us some fuel for a rally. It does two things. It squeezes out the shorts that piled in there or any that are still short, and it puts a new dynamic into the holders of gold, a new supply demand dynamic, because if anyone that's held through this didn't get washed out, they're probably the ones that are just going to hold it no matter what it does. So you have just a more secure pool of holders or longs, if you will, in gold. When you get that washout move, they're less likely to sell. If they didn't sell on this move, why are they going to sell if this thing pops 10, 20%? And they're probably, tuck GDX away and they don't even look at their statements, or they don't care. They're a long-term believer in the miners. That's the way I look at that. Okay, I've burned through nearly 8 minutes of my allotted quote-unquote 20-minute time. I will probably run a little bit over that, but we'll fly through the charts now. This is IX 1100 in the TC 2000 charting platform. Maybe freestockcharts.com probably has the same symbol. And it says gold, but it's not the price of gold. It's just an index of gold mining stocks, probably similar to the HUI, H-U-I. HUI is the Amex Gold Bugs Index. So what I'm going to do is off the screen, it's populated a list of all the holdings. There's 43 total. I'm going to run through them quickly. Just pointing out what I see. You can freeze the video, pause it, replicate these charts, or if you're a gold member, drop me a line in the trading room and I'll be glad to mark up some price targets. All right, let's run through these. In order of descending market cap, so Newmont's the largest, also top component of GDX as well. Bullish falling wedge, positive divergence. You can see all the divergences, bullish and bearish, in the past. You also can see these support lines. So if I don't mention it, you see horizontal lines. I will say a lot of these charts I haven't updated in a while, but if you see lines nearby, they're good. And if I see anything else, I'll stand out. So where can this one go? I mean, if this marks the end of a pullback, we're talking easily a move up to $42, but these are the first couple resistance levels you have to look at. FNV, Franklin, Nevada, it's pulling back. Here's an uptrend line right here, this blue trend line. Not very well validated yet, but there's also a couple support levels there. One to watch. PPO is above zero. That's indicating a bullish trend for now. We had a divergent low right here with a bullish falling wedge, a breakout, and so far it's maintained that breakout. So here's a stock, despite what's happened to gold. Here's one of the leading mining companies. It's still, comfortably above its breakout point and has maintained that breakout. It's just traded sideways since that breakout there. And of course, that is largely due to the price of falling gold. And in fact, it speaks volumes that the stock hasn't dropped more than that. But then you can see the bearish rising wedge here, and that was a correction that we had. So there's FNV. Not one of my favorites, but maybe a long trade here. And the other takeaway, if you don't trade these stocks individually, if you don't plan to hold them, invest in these or swing trade them, this also gives you, or at least it gives me, an idea of how the overall sector looks, not just looking at GDX, but looking at the individual gold mining stocks. And then collectively, I can get a better opinion, you know, is this a good time to step in or not? ABX, Barrick Gold, bullish falling, I'm sorry, not a bullish falling wedge. We have positive divergence. We had a positive divergence right here, divergent low, boom, big rally. Doesn't look like much. I use log scaling. That's a 26% pop right here off that low. We have a bullish divergence once again. I can extend this line out. So I'd expect nothing less if we can get a pop here. In fact, there's a little level here resistance before then, but I think we can easily move up there. So you're talking another potential, 25+% rally, and possibly more again if this is one of those overbought, oversold readings in a bull market, and we're going to get the next major leg up. Remember, there's a lot more upside potential, but there is work to be done to firm up the case that gold is bottoming around these levels. That I have to say. GG. What stands out to me, just here's a big one of the leading gold mining stocks at a very well defined support level around $12 that has capped all pullbacks since late 2016. So can't promise you that level is going to hold, but I can promise it is objective to go long on a pullback to a well defined support level with a stop somewhat below, especially considering the stock is oversold. Next one up, AEM. AEM broke down from this bearish rising wedge, negative divergence preceded that, and has now fallen support zone right here. It's not super well defined, but either way, I can tell you the wedge has certainly met its measured target. If you take where it broke down, add it to the distance, widest part of the wedge, this one's certainly played out so far. That's probably actually almost a perfect measured move right there. Again, that doesn't mean it has to stop there, but you take the widest point of the wedge, look where it broke down, boom, right where we've gone so far. AEM. Gold, GOLD setting up bullish falling wedge. There's a trend line break, some resistance around 75.45 to clear, and if it can clear that, it looks good up to here at about 83. RGLD, divergent high, breakdown. This box here, this shaded box, is a trading range that it's been in for the last year or so now, and it's coming up on the bottom of that trading range, which is support right around 81, give or take. And, these things trade choppy. You can see these intraday candles, these spikes through, so you have to give it room on your stops if you're going to trade the miner successfully. But the risk and reward are above average. So, a lot of these stocks are shooting for 20, 10, 20, 30+% profit. So therefore you need to use a 10+% stop loss in order to not get shaken out in the day-to-day grinds and these things, the daily gyrations. Oversold as well, by the way, guys. Oversold at support. That one looks good there. KL, trend line to watch. This one's actually been in its own little bull market. Didn't get the memo that gold has been falling, so I don't really care to chase that. I see negative divergence. I could draw it out there. So not one of my favorites, but it is above trend. You can keep buying it. It must have some strong fundamentals to be moving up against falling gold prices. So I wouldn't short it. I don't care to short any gold stocks now, but I just want to point that out. KGC, Kinross Gold. There's a nice bullish divergence, potential divergence. We need to see this PPO curl up, very oversold. There's a support right here, 320. Keep in mind too, the lower, when you get down here under $5, especially any of these, when I get down to the bottom of the list that are under $1, high risk. When stocks start falling down below the $5 mark, especially the $1 mark, they can go to zero. So don't ever put more in, especially in a sub $5 stock and really below a $1 share price. Be very careful with those. High potential gains if they turn it around, but cuts both ways. So be careful there. AU, I see a little head and potential inverse head and shoulders. You can see left shoulder, head, right shoulder. And if you're not familiar with those patterns, just do a quick Google search and you'll get a definition. But that's what it looks like. They're potential bottoming patterns. So you'd want to see a break above the neckline, which is right around 893. And there's your targets right there. AU. This is AUY, Yamana Gold. Just I see what stands out to me, pretty nice resistance level here. A lot of reactions around this level here. We broke above it briefly, but then fell back below. We've had several attempts at it, so it's knocking on this door of about 320. A break above 320 most likely brings us back up here about 375. That'd be a big run, and these low price stocks, don't underestimate it when you're thinking, oh, what's 50 cents? On a $3 stock, it's 20%. GFI, Goldfields, bullish falling wedge, confirmed with divergence. There's some potential targets. IAG, trendline break. It broke out. Actually, this had a divergent low, bullish divergence right here. Broke out, and it's been back testing all along. Has pretty decent support. If it gets down here around 485, I'd really be interested in that, especially if the charts of gold confirm. Is BTG, B2 Gold Corp. Nice, well-defined downtrend line, some bullish divergence in place at the bottom, at the lows recently, and then you can see some levels here. And of course, you want to wait for a breakout, or you can buy at the bottom of that price channel on that other one. AGI, pretty well-defined support. And, a lot of these stocks are in pretty precarious technical levels. This would be new multi-year lows if it breaks a support. But, and you can see, if you look closely, sometimes it'll punch below there. These stocks are very volatile, and they do like to give you these little false breakdown signals. So I give them a little room. If it drops below that line's at whatever that line's at, 495, the stock's at 493 now. To me, that's not a breakdown. You'll know it when you see it. You'll see a big red impulsive candle. So this one, technically, at least from here, is still at support. You can see that other reaction down there that went a little bit lower. And then if it can hold this support, it looks good back up here to the top of that trading range, about 594. Not small potatoes. If you hit it, that's about a 20% pop. HL, Hecla Mining, bullish divergence, not confirmed. This one's still, it's sort of been sliding pretty hard since it took out that 350-ish support level. Got to be careful with that one. But a lot of the, success or the fate of a lot of these low-price stocks hinges on gold. If gold continues to slide, goes much lower, remains in a bear market for another 6 months or year or more, then you will see some of these companies go to the wayside more than likely. I mean, file for Chapter 11 bankruptcy protection, or just go down to that, penny stock price level and stay there for a long time, if not ever. They have to issue shares, dilute the shares, shore up capital, go out and get money however they can. So be careful with the low price ones, but there's a lot of profit potential. I mean, if this one pops just back up to this downtrend line from where it's at now, losing time here on the video. I'm trying to capture that. Be about a 36% pop, give or take. OR, nice bullish falling wedge at support, 890. You can see this previous reaction here, so you can take it here at support, maybe add a position if and when it breaks above that wedge. And here's some potential targets all the way up to maybe $12, depending on how much traction any bounce that we get in gold has. SBGL, I like this one. Nice falling wedge, divergence, right at the trend line now, flirting with that downtrend line now. If it breaks out, 336 and 439 are my first two targets on that one. Tahoe, T-A-H-O, Tahoe Resources. There was a downtrend line there. It broke out, it back tested for a while, and it's flirting with this 424 support now. NG, Nova Gold, symmetrical triangle. Respect whichever way it breaks, but it's at support now, and if it can break the downtrend line, then a 488, 490 looks like first target. And potentially, if you're a long-term, if the charts in gold really start to firm up in the gold mining stocks, this one has a potential to work its way all the way back up to 621. That'd be a big move from 431. SSRM trend line looks like it just cracked below that trend line, so you got to be careful. If it recovers the trend line, great, but if not, that's not a very good sign. You know what? I need to actually tighten that trend line up a little like this. So we're just below the trend line. I think that's a better fit right there. And it needs to, the bullish case would have it recovering that trend line and breaking out above 1080. If it breaks above 1080, I think it's smooth sailing up to 1136. CDE, love to trade this. I've traded this one many times in the past. It usually trades well to the technicals, but it's been in this sideways trading range all year now, and recently broke down, gave up the ghost. That was a break of support, and the sellers are piling in. If it can recover and get back above 727, great. But if not, it's, right now there's no buy signals at all. You could take a shot at it. And again, the fate of a lot of these stocks will have to do with what happens with gold and silver prices. If they start to rally and rally pretty good, CDE will turn around, and this sucker, when it runs, it can really run. EGO, symmetrical triangle. I don't know if you can make out these two lines, the uptrend line, the downtrend line. I have so many bright colored lines. I should have adjusted those on the chart. I just didn't have time to get to each chart before this video. But look for a break of the downtrend line to position long, or you can go long here on the uptrend line. We're near the apex of this symmetrical triangle, so a pop above it could take us all the way up here to 146. It's $1.06 now. Remember, low price, high risk. Keep your position size small, but there's a 40+% return. Harmony Gold, HMY, pretty much flirting with support. That's all I can say on that one right now. It's at support. It's low price. These are former big market leaders. I mean, Harmony at one point, you go back just a few years, and this stock was 14 bucks. And now it's down about $1.68. Shows you what happened with some of these miners. SAND, Sandstorm Gold Limited, at support. 424, pretty well-defined support level. Here's a downtrend line to watch. Break above that downtrend line could take us up there to $5, possibly more. NGD, New Gold, had a little nice, and here's how divergences don't always play out. Divergences are just an indication of a likely trend reversal, but a buy signal comes when you get something like a break above support or a chart pattern. So here was a falling wedge with bullish divergence, and it didn't play out. You never had a buy signal. This one just crapped out and fell down below the wedge. So their divergences are no longer intact. This one's very oversold, but it's flirting down there around that $1 level. Something must have gone on recently with New Gold. Probably want to stay clear of that one. SA, I just don't see much in that chart worth talking about. GS, here's a price channel, sending price channel. It's working its way up in here, but that chart doesn't stand out to me. GORO, Gold Resource Corp. We had a nice uptrend line, boom, broke, and then a lot of selling, but big old support, nice support right here, about $5. It almost got there, maybe another thrust down. If the charts confirm at the time, the charts of both this stock, of GDX, the gold mining sector, and of gold, and of the dollar. And I forgot to cover the US dollar in the beginning of this video. I meant to, but I'm keeping an eye on the clock here. We're 21 minutes in, and I have a few more to go, about a little over a dozen. GSS, it's at resistance now. Might have some divergence if it pops above there. But if it can clear that 75 level with conviction, it looks good. But this is low price, and I'm starting to get into low price stocks. I may wrap this up and just cover the euro and dollar before we wrap up here, because these are really penny stocks at this point. Most of these are 74 cents, but it has the potential to run up to 92. So if you like the aggressive trades, this one's flirting with the $1 level. $1 level is usually important. The companies will try to defend that level. You can trade below it for a little while, but if you trade below $1 too long, you face a delisting, depending what exchange it's on now. And so a lot of times the companies, the executives, the major shareholders, they'll come in and they'll try to buy it, prop it up, keep it, but get it back above that $1. So it's at 101 right now, and it has decent support here around 92. And there's a downtrend line, not super well defined, but you watch that downtrend line for a break. That brings us up here to about 130 and possibly higher. So there's a speculative, more aggressive trade. ALO, bullish falling wedge, $1.24. Remember, we're in the low price stocks now because I've been going through this list in order of market cap. So each one I advance to is smaller and smaller than the previous company. Not share price. Share price doesn't matter. Market cap is, when you add up all the shares, the number of shares times the price per share, that gives you your market cap of a company. So there it is. Downtrend line to watch. That downtrend line actually goes back for right about there. There's one with an uptrend line working its way up an uptrend line, and yeah, I'm going to go ahead and wrap it up here. THM, 44 cents support, pretty well defined. You can see how long that goes back. We were only traded below it for a little while back in 2017, recovered, and so this one you can buy it here. Again, high risk, low price, but high profit potential. If you can buy it close to 44 and it comes back to the top of that range again, you're talking about a 72% return. So You can put just a small fraction of what you might in a normal position with a stop somewhat below there, ideally on a daily closing basis, and swing for a target up to the top of that trading range. All right, we'll wrap this up looking at the euro US dollar because that is what will largely determine where gold is going. We had a divergent high right here. We had a divergent high up here. Hit my final target zone, bounce from there, put in another divergent high. Then we took out this trend line here, these two yellow lines form a large rising wedge, but most important is the uptrend line broken. Very sharp correction in the euro US dollar. For those of you not familiar, this is one of my favorite proxies for charting gold because this pair, the euro is by far the largest component of the US dollar index. So with this chart, when the euro US dollar pair goes up, it means the euro is rising against the dollar, so the dollar is falling. And so right now I can make a case here. I can see some pretty strong divergences building. You can see the RSI and the PPO making higher highs. They're still below, they're in that bear market trend below that zero line. But if we can pop up here, if we get a reversal soon, even if that comes, if we zoom in here, and I highlighted this before, I highlighted it with gold, GDX, and the euro, we can get a little pop below here, and it would actually be nice to see. It might cause a little more pain in near term for gold and GDX, but if the euro dropped below there, we would have a nice clean divergent low. Right now, we technically didn't make a lower low. Now, that's splitting hairs. You can see we had a low right here, reaction low that hasn't yet been taken out. So technically speaking, we'd have to make a lower low to confirm these divergences because at this point, we only have bullish divergence right here. But it's close enough. Again, when you come down, I view positive divergence is prices making either equal or lower lows. In this case, we'll call that equal lows, with the indicators making higher lows, and that's what we have here so far. Waiting to be confirmed, so confirmed means a little more upside here. Will give us a bullish crossover on the PPO if it can take that PPO back above the zero line, and most importantly, if we can take the Euro USD pair pop above this this downtrend line, that could spark the next rally. That would mean euro up, dollar down, and gold should boom. Gold should really rocket if that does happen. So there's my analysis. Lots of trade ideas for you there if you want to trade the individual stocks, and if you plan to just keep it simple, and there's nothing wrong with that. GDX is nice because it's diversified. It's a basket of stocks. I showed you a couple in here that recently imploded. You don't have as much risk. Now, GDX, you can lose money, especially Dust Nugget, if you're on the wrong side of the trade for too long because it does move sharply in both directions. But being that it's diversified, you have a lot less risk. So if you don't want to try to manage those individual stocks, that's a good way to go. And if you don't like catching falling knives like I do, then wait for a little more evidence. You might miss the reversal or turn, but we might have the charts may begin to firm up on gold, the US dollar, or euro US dollar pair, and GDX. So therefore, we might have a higher probability entry. And then there's the split the difference strategy, which I like to do. Scale in, take a little position here, nothing heavy. If the charts continue to firm up and strengthen that bullish case, you can continue to add to that position up to your predetermined allotment. Like I said, it's up to you, 10, 20%. Usually I don't do much more than 20% of my portfolio in any one given sector. But it all depends on, what that sector looks like, how volatile it is, and a lot of other variables. So that's it. Wrapping it up here, just under 28 minutes. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.